Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Manglam Malu. Manglam, good afternoon. The markets have really changed the trajectory in the last 10 minutes of trade. So looks quite fueled at this point in lunchtime. As far as Nifty and Sensex, all of them have made their efforts to turn into the green. In fact, the mid-cap index had also made that effort and right now just about on the flat line as we speak. So from the low point of the day, there has been huge amount of support coming in, and therefore there has been a bounce back. In fact, this has been led by Bank Nifty and a huge amount of support really coming in from Kotak Mahindra Bank. And take a look at that particular chart as well. Even though ICICI Bank is one of the big contributors in the market today, but that has shown steady gains in the trading hour today. Reliance Industries is another one after giving huge amount of support yesterday. Today also is in the green. But as we speak, advanced decline, that still has a long way to go because the larger markets really have to participate in this kind of a bounce back that we are seeing at lunch.
Absolutely, Nisha. You spoke Kotak Mahindra Bank as well as ICICI Bank and report to the Nifty. In just the last few minutes, just pull up something like an HDFC Bank as well as HDFC Limited, adding further recovery that we're seeing on the Nifty from the low point of the day. But by and large, it's been a day of a little consolidation in a slender range, which perhaps is better given the sort of moves that we saw in the Asian markets. Barring Nikkei, which benefited on account of a stronger dollar and therefore weaker yen, closed with a gain of 0.6%. Hang Seng as well as Shanghai, both of them fell from the high point of the day, ended closer to the lower end of today's trading session, including Kospi as well as the Singapore markets. And as we speak, the European markets, they've opened fairly in the green. The DAX is the only underperformer there. Yesterday too, the European markets were ended in the green with slightly mixed notions in the frontline indices. But as we speak, the CAC and the FTSE fairly in the green. The only underperformer is the German index there.
All right, and when we talk about the Indian markets, it can't get bigger than this. Let's take it straight to a big CNBC-TV18 exclusive and let's hear out the big bull, Rakesh Jhunjhunwala, in conversation with Shereen Bhan on the markets, politics and the macros.
What I feel personally is that, see, markets have had a tremendous rise. I think we bottomed in August 2013 around 5,200 or 4,800. And you had the Nifty go to about 11,000, 11,300. I think we are now correcting. And if you look at the long rise that we have had, it's a very, I would say it's a very poor correction, right? And I, for one, believe that, bull markets cannot end at this level of GDP to profits. This level of profits to GDP. The capital cycle, investment cycle is just starting. I think you have to start the flow of local money into markets. I think it's just the beginning. Abhi to khali trailer aaya hai. And I don't think this flow is going to stop. The index may have lost maybe 10% or 7-8%, but there has been tremendous correction in the mid-cap stocks, right? I don't think that political uncertainty is going to let these markets go down beyond a point.
Let me start by asking you about politics, because you said political uncertainty is only going to weigh so much and not further as far as the market sentiment is concerned. What is the mood in the market with respect to what is happening on the politics front?
See, I don't know what's the mood in the market. I know what I feel. I personally feel it is too early to predict an election which is going to take place 11 months hence, right? And see, it's in the history of all democracies, bypolls by and large always go against the ruling party. So I think too much is being made of the fact that the BJP has lost the bypolls.
That's as far as politics is concerned. Well, let me talk to you about flows, Rakesh, and that was something that you alluded to as well. And while you're right that domestic institutional investors continue to put in money into India, between 2013 when DIIs were actually not pumping in money, they were net sellers, to now about 81,495 crores in 2017 to about 58,000 odd crores in 2018 so far. It's a different picture if you look at what's happening as far as FIs is concerned. And it's not just with India. We're seeing this emerging market outflow at this point in time with about $3.5 billion out of the emerging market ETF. How is that going to play out?
I think the local influence is going to be far greater than the foreign influence. And remember one thing, the major amount of the foreign money is company specific. A lot of people are invested in HDFC. A lot of people are invested in HDFC Bank. A lot of people are, are invested, say, in TCS. So I don't think that's got anything to do with India. That's got to do with Indian companies. So I for one feel that the flow of the local money, first of all, will be far greater than the foreign outflow. And I don't see at the moment India's macros are much better than the other emerging markets. Right? And with oil
Not
price...
as good as they were.
Yeah, but I feel oil price will, at today's $74 Brent, Indian basket is at $70. I for one think is going to come to 69, 70. At these levels, India's macros will be very good.
The rupee?
The rupee will be at these levels. Maybe a rupee here or there. I don't see the rupee going to 75 and 76, and there's no reason why it should. We have $400 billion of reserves. And we are a most investable country. And we have never had, we have never had any defaults. Our track record is tremendous as compared to the other emerging market world. Our levels of debt are nothing as compared to China. So I think on that, on all those parameters, I think India is doing well.
All right, so that was some commentary coming in from the big bull Rakesh Jhunjhunwala himself. We will play excerpts of this conversation all through today. But with that, we'll slip into a short break, come back, get you an excerpt of the chat we had with Sanjay Nair of KKR on India and equity markets and the road going ahead. Well, the Nifty is holding up mildly in the green, but if you take a look at the biggest weights out there, Reliance, in fact, should come up for you. That one is at the high point of the day, has been doing the batting for the frontline index for the last 1 week. In fact, in June itself, that stock is up about 12%. And as we speak, a record high on Reliance Industries. At the high point of the day, 1035 is the record high. Keep an eye out on ICICI Bank as well, helping the Nifty Bank, which is closer to the higher end of today's trading range. And ICICI Bank, which was in the positive territory all through today's trading session, has now only extended its gain, currently sitting at the high point of the day. With that, we'll move on to the next one. We have the Finance Ministry holding a meeting with lenders to the power sector today. Anshu Sharma joins us on the phone line with all the details on what is likely to be on the agenda. Anshu.
Department of Financial Services Secretary, along with officials from RBI, bankers and power sector industry representatives, the coal, power and petroleum ministry is meeting today with regards to the Allahabad High Court order which came on June 2nd, which has succeeded the RBI circular which came out on February 12, basically seeking that one-day default in any NPA or power sector assets will lead to asset resolution. So basically, the government is trying to bring in all stakeholders together and trying to seek a view with regards to Allahabad High Court order, whether there will be a stay on it or not. Looks like the meeting will still go on for another half an hour or 45 minutes, and after the meeting, we'll get to know what the stance of the government is on the Allahabad High Court order, because this will have a huge impact on the power sector, which already has about 70,000 megawatt capacity under stress, which is of over 2 lakh crore rupees. Back to you.
All right, thanks Anshu for giving us all those details. So power companies and their NPAs in focus today. Let's see what the government really decides, especially from this finance minister's meeting. Now, a day after the US government imposed, remember, the additional tariffs on welded pipes from India, the government retaliates with its own imposition of tariffs on 30 products imported from the United States. Rituparna Bhuyan, who's my colleague, joining us with more details on this. Tell us, Ritu.
So finally, the Central Board of Indirect Taxes and Customs released a notification imposing retaliatory tariffs on U.S. products last night. And these retaliatory tariffs have been imposed because the United States had imposed additional duties on steel and aluminium. And India claims that it will suffer losses up to $241 million due to the U.S. tariffs on aluminium and steel. And India maintains that the U.S. tariffs on steel and aluminium are not compliant to WTO rules. So these retaliatory duties have been imposed on select farm products, chemical products, metal products originating specifically from the United States. For example, you have products like almonds, and of course chickpeas, lentils, walnuts, apples, boric acid, and several steel-related downstream products have been included in this list. And India maintains that it reserves its right to modify this list, and we'll have to wait and see if India will impose or include more products in this list. With that, it's back to you.
All right, Rituparna, thanks a lot for that. We will watch out for any developments there. But marquee private equity firm KKR India, which manages assets worth almost $170 billion globally, is bullish on India but calls equity market valuations expensive. India head Sanjay Nair says that there is no dearth of foreign funds for Indian businesses, but foreign investors like continuity in reforms. Nisha Podar caught up with Sanjay Nair on his views on Indian macros, factors impacting foreign investors, and sectors that look attractive.
I would say on the valuations, they're generally expensive. I mean, the markets trade at 20, 22 times plus earnings. And I don't see 22% or even 16, 18% net income growth. So they're obviously trading at a pretty high PEG ratio. Right. So unless you can really demonstrate growth of that kind, it's tough to sustain these. Now, will India correct and will it come off? I don't think so, because there's such a wall of money always coming into the country. Right. And also the domestic savings in the mutual funds have been growing. Right. So you have a bit of a support there. But it could very well stay flattish for a few years, which basically means that you don't have much equity growth for a few years. It's possible.
KKR has invested in so many NBFCs, financial services companies, and you continue to look at many others, as I understand. Now, do you think that this space is gaining at the expense of the banks, also because banking sector is looking so bad that the NBFC and financial services still looks much more attractive? And how do you position the valuations in this particular space?
I just fear sometimes the valuation and the hype may be a bit too much. Yeah. But just leaving that aside, the business is definitely there. Lots of new NBFCs coming up. I think they're all going to do pretty well if they can stick with the principles of really good credit and good credit management. They'll be fine.
Now that the valuations have come down considerably, Sanjay, and you have already made your returns and exits in the past, are you in entry mode, and are these valuations looking good now?
What is becoming interesting in terms of deal flow is that given indebtedness at conglomerate levels, yes, a lot of conglomerates looking at deconsolidating, a lot of promoters, discussions around succession planning. So that's creating a very interesting deal environment in the private space. Right. So that's clearly one area where, despite valuations being high in the public markets, you can actually have a reasonable deal construct in the private space. Right.
All right, so equity markets in India looking expensive even at these levels for the foreign investors like KKR is the big takeaway coming in from there. But as we speak, mid-cap index is in the red. In fact, markets are losing steam. Nifty is flirting with that red and green line at this point. So lost some bit of steam in the last few minutes of trade. With that, we'll slip into a short breather on the show. But we'll get you more on the markets and also stock-specific action on the other side. Stay tuned. Welcome back. You're watching Business Lunch, and take a look at the markets at this point. Bank Nifty is outperforming the rest of the key indices. Mid-cap index is just about on the flat line, trying to get into the greenish space. But at this point, I would say it's most of the market is looking like in the space of status quo. But Future Enterprises, that's one stock which has really gained in the last few minutes of trade and continues a good momentum there. And Trent is another stock that is on my radar from the smaller mid-cap space. All right, let's move on then and talk about some of the developments for the day. And the world has its eyes on the OPEC meet, where the world's most influential oil-producing nations have really gathered. And Steve Sedgwick, our colleague from there in Vienna, is getting us all the details on the OPEC meet, which is underway. Tell us, Steve.
locked-in negotiations, and it's not just here at this beautiful Hofburg Palace behind me that these key players meet. They rush round in their black limos around Vienna to the various hotels, having a whole series of bilaterals. And of course, what Saudi and later Russia, where Mr. Novak gets in today, will be trying to discuss is how they manage some form of partial exit from the cuts, the 1.8 million barrels, which were taken off the table and successfully got the oil price to where they wanted as well, because they're listening to the customers now, the US, the likes of the Indians, the Chinese, who are a little bit disgruntled about the way that price has gone. So they need to put a little bit more back on the table because they believe the strategy has worked successfully. But there are some very big buts about price volatility. And some of the most senior people in the oil industry, the IOCs who I've been talking to, and I spoke to Bob Dudley yesterday as well, and indeed the NOCs, the actual companies themselves that run the oil for the state, a lot of the other bodies as well, very concerned about the price volatility.
All right, Steve, thanks a lot for that interesting description there. The lush black limos, that's something I believe we'll be watching out for as well, apart from, of course, the outcome from that OPEC meet. But let's move on. The second tranche of the ICICI Prudential managed Bharat 22 ETF follow-on fund offer was launched on June 19th for institutional investors, while for retail investors, the further fund offer opened on June 20th. S. Naren, the ED and CIO of ICICI Prudential AMC, joined us earlier today, spoke about how many public sector companies are trading at attractive valuations. Listen in.
When you look at the valuations of many of the public sector companies, you will find that many of them are actually trading at pretty attractive valuations. And in fact, the price to earnings of this index is easily 30% lower than what it is of the Nifty. We think that the outlook for the next few years for earnings for the Bharat 22 pack is very significant. As you all know, the earnings expectation in the large cap index itself is 20%. Most of the private sector has not been investing in power, particularly thermal power, and the few of them who started thermal power plants, they're all actually moving out of this area. So I think the power sector, clearly I would say that the worries from a regulatory point of view have never been there, and we think that the entire down cycle in power utilities ended a few years back, and on a continuing basis we need more and more power, and that's why we are not really worried about it.
All right, so that was a power-packed business lunch for you today. With that, it's curtains down. It's goodbye from the entire team of Business Lunch. Midcap Radar is coming up next.